Hey everyone, Panyo here. Welcome to another episode of After Dinner Mints. Before we begin, I highly encourage everyone watching to join us in the Art Blocks Discord. For those watching us on the live stream, there will be people in the community chatting in the Art Blocks Mints channel. A link to our Discord can be found in the description of this video. As always, make sure you like, comment, and subscribe to our YouTube channel so you don't miss an episode of our weekly show. One note in mind before we start the show, this is not financial advice sponsored by Artblocks, but instead general information from a US-based company, as well as two tax experts. Finally, we still ask collectors and artists to always work with their own tax advisor, as what is discussed during the After Dinner Mints discussion may not apply to everyone. And with that being said, I want to introduce our guest for this afternoon. We have a Senior Associate of Armanino, Andrew Rudnick.
Hey, Vanya.
And then we have Senior Manager of Armanino, Clayton Lowery.
How's it going?
Well, thank you to the two of you. I know this is an exciting subject for a lot of people, maybe a subject that not everyone really enjoys, but it's something that has to be discussed each and every year. So yeah, we're going to be talking about taxes, and I hope that everyone tuning in can pick up some information from this episode. With that being said, Clayton and Andrew, can you kind of talk to us a little bit about your background?
Yeah, sure. I'll go first. Clayton Lowery. I'm based in Dallas and Florida, both these days, so that's been fun. I got involved in crypto about 5 years ago during the 2017 run and come from a background of a few different things, analytics, worked in Hollywood for a while, and then also worked in a public accounting for about 4 years before I joined Armanino. And joined Armanino in the beginning of 2019 when we formally launched the practice. We had been working in the space since 2014 on a little company at the time called Coinbase. And that experience led us to formally launch a crypto practice where we have a team now of about 20 of us fully dedicated to crypto 100% of the time. And we do a bunch of different things in the space, build really awesome software focusing on trust and transparency in the industry. We provide subject matter expertise to all the existing traditional service lines like tax, like we're talking about today, risk in IT, audit, and outsourced finance and accounting. And we also do different consulting projects with NFT strategy and NFT on ramps where we get nonprofits and other companies onboarded on to be able to do some fun stuff in this space.
Great.
Yeah, I've been at Armanino for about, I think, a little over 6 months now. Prior to that, I was doing enterprise software implementations. So another glamorous and exciting topic. But since I've been at Armanino, I've been helping out with some of the Trust Explorer stuff. And as Clayton said, doing some more NFT projects. Half of our job is working directly with crypto companies, but then the other side is supporting our traditional accounting, tax experts that don't necessarily have that same expertise in crypto. So doing a little bit of middleman teaching for our different experts.
Great. And then I know, Clayton, you provided a little bit of the background on Armanino. I'm curious to know how much has changed just in the past. I know a lot more people have probably been onboarded in the past year than probably the last several years, but I'm curious to know from the two of you, maybe provide a little bit of background of Armanino and how much has changed in the space just in the past few years.
Oh yeah, it's totally different. Armanino is a top 25 US based accounting and consulting firm. We do all of the traditional stuff like I mentioned, and a lot of really neat consulting service lines that we've been building up in recent years. And that would kind of be what I say is the main shift over the past 5 to 7 years is a very focus on technology, and crypto is a huge part of that. Just at the beginning of the pandemic, there was only 4 of us on the team at the time, and so our team's grown along with the market. And like I said, we're up to about 20 now, and we're all extremely busy. Back a few years ago when we first launched the practice, we were at zero and really trying to get things off the ground. And now all of our service lines are doing well within crypto, and then our team that's fully dedicated is now like 4 or 5x, and we've got a great technical team, and so it's been a lot of exciting growth.
Great.
And to talk on top of like how fast this space has changed. When I joined 6 months ago, really just expected to do just purely Trust Explorer, a lot of this real-time accounting services. But since I've joined, you can really see how dramatically NFTs like picked up adoption. A lot of my experience was just minting art blocks, a few collections here and there, but then all of a sudden hopping on business development calls like every week or a couple times a week with NFT specific projects. So that was a pretty interesting change.
Very cool. And then, what types of services are currently being offered, in the crypto and NFT space?
We do all the high net worth tax work for individuals. Also, a lot of formation stuff for companies and foundations for token or NFT projects. We're also getting more into, I would say, NFT strategy consulting, where we are advising and helping teams build their NFT, like from the technical side, the smart contract side, and also like where you meant, and just providing consulting advice on that. So Andrew's been awesome, like keeping up with that changes. I feel like the shifts in that are very frequent. So he's been great to help lead that. And then he's mentioned Trust Explorer a couple times, which is our real-time transparency software, and has a few different branches. Proof of reserves, which has been a thing in the Bitcoin world since 2014. That's something we're proud to have helped push along as far as we've gotten it now. And we do real-time audits over coin shares and Nexo, like in some of the biggest names in the spaces, and showing that their reserves are there, and then the notes are backed, and we do a lot of different things. I could probably spend the whole time talking about all of that. A lot of it comes to us, like something will happen in the space, and it's a new opportunity for us. One thing we're getting into now is treasury. We think DAOs are a huge piece of the future, and how they're going to manage their financial reporting and manage their treasury, and give the community and the token holders transparency into that is going to be a big future wave.
Great. And then, all right, so I want to start kind of at the beginning, because I think a lot of us are very new to crypto taxes, NFT taxes. Are there any software recommendations you have for someone to start the process of calculating taxes, or do you think that's something that's still being, worked on and created by a platform?
So as far as, NFT specific platforms, just to get your bearings for, different tax liabilities that you've seen over the past year, I really like NFT Bank. I think the URL is ntbank.ai. All you do is plug in your different wallet addresses, and does a pretty good job of initial cost basis and what you've sold so far. As far as other softwares, I personally like Coinly, Coin Tracker, Zen Ledger, all of the normal tax softwares that people advocate for.
Got it. And do you think that's something that is going to just be, continually improved over the next few years? Because I feel we have a tax talk channel on our Discord, and some people are saying that some things work on some platforms and not others. Do you think there's going to be a time where the IRS will have some kind of standard, maybe, where it's like, all right, this is, or maybe, I mean, they probably don't provide their own software, obviously, but do you think there's going to be some kind of, I feel like they should, just to make it easier for everyone, but do you think there's going to be like a go-to, software out there that, everyone can use universally, and then it'll just be like dispersed between different companies, maybe?
Possibly. It's very interesting because these types of services haven't really been there from, traditional tax reporting, from if you had like a Charles Schwab account or an E-Trade account, right? They do all this for you. So this is a really new domain for like providing this service that a lot of people aren't really used to, let alone from, whether they traded before crypto or, come from traditional finance. So this is really uncharted territory for all these.
Yeah.
And I wouldn't expect the IRS to move very fast. I think their last formal statement was about like the Bitcoin Cash fork. So they've got to get through DeFi first and then NFTs. So I think it's going to be a while. The softwares are kind of a moving target, like because we innovate so fast, and it's hard to keep up with it on the development side and track all these smart contracts, whether it's DeFi or all these different NFT projects. So It'll definitely improve for sure, and we'll have some sort of standardization at some point, but I still think it's going to be a while.
Okay, great. And then based on your, so what was that?
I was just gonna say, especially like knowing that for like NFT tax tracking, up until like July or August of last year, like this wasn't on anyone's radar.
Yeah.
So the fact that these different platforms are like building as fast as they can and actually have a working product already is pretty impressive.
Yeah. And like you said, I think, things are moving so quickly. And these companies are just adapting. So I think it's just going to take some time. So I know we're all looking forward to, already probably for next year. I think it'll be a little bit more simplified, I would hope. But, based on your experience, what are some of the pros and cons of the most popular, crypto NFT tools available to people today?
I'd say the pros, they work really well generally. And I think they're really affordable. They're a few $100s, and you can plug in your all of your wallets and most API exchanges. And if you don't have an API connection, you can format the CSV, which isn't fun, but it's a decent option. And so I think they're pretty good if you just want to do it yourself and save money. I think they work really well. The cons would be like I mentioned a little bit ago. Things are changing so fast that there is like a lot of manual work you still have to do. I don't think you can really like just plug in everything and then take what they say and just run with it. I saw an analysis recently where someone did the exact same data in a few different softwares, and they all had different. They came out with like every single one was a different gain loss result. And so I think there's a lot you really need to, especially if you have a ton of transactions and complex ones, whether you're in DeFi or NFTs, you need to go through it manually and make sure it's not either doing something that you don't think is accurate, or it could be hurting you and making you have to pay more than you could. They generally take a conservative, like most of the softwares take the most conservative route, which I think is the right approach for them. So if you want to be a little bit more aggressive, because there is a lot open to interpretation, you've got to really go in there and do that yourself. But generally, I think they work really well, and they're innovating fast. It's hard to keep up with crypto, like really hard. And so I have a lot of respect for those teams. We work with a few of them, and generally, I think they're quite good.
Cool. And then, what are some of the key features you think that are still lacking in these tax tools today that still need to be like maybe created or innovated?
Within like the NFT stuff, I think I'm probably the most active forum poster on some of these platforms I use. Like for example, I was doing a batch transfer from OpenSea from one wallet to another, and for some reason that gets tracked as like a trade. So working through these kind of like weird contract interactions, that goes for NFTs. I go for using year-end vaults and where there's different token transfers. Some of those bugs just kind of generally need to be worked through. I think tracking cost bases and tokens across layer 1, layer 2 is definitely something that's going to be relevant, I think, in the next year or two.
Got it. And then I hope that most people are already working with a tax professional, but if not, like what is the best practice for someone to prepare their taxes for filing this year? Like maybe they haven't done anything. Hopefully they've, are at least started something, at least kind of got like the base down. But, let's just say maybe it's just like pretend it's like December, but like what should people start doing to like prepare? Like, do they go to Etherscan to kind of pull everything, or, obviously using some of the software, or how would you start?
Sure. So if you're working with a tax professional, there's kind of two different ways I think about it, right? So someone like myself who's using a tax software to get generally a rough idea, you want to have all your transactions manually updated, make sure that there's no glaring issues, have that transaction list ready for handing that over to your tax partner, and then being prepared to have kind of a conversation around some of these troubles in the transactions. What's the cost basis of providing liquidity, or for this complex NFT burn and redeem mechanism. Those are the things that you want to be comfortable to have that conversation with your tax preparer. On the other side, there's situations where you just want to give your accountant, these are my addresses, these are everything, can you just do everything for me? in that scenario, you want to be sure to have all of your wallet addresses that you use ready to hand over, as well as your exchange API, so that we can use our own tax software to run those through. And again, if we're doing that, then you'll likely have to provide some insight. Say, what was this random transaction? We can't decipher between whose contract this is. So it's really just like an open dialogue and being prepared to spend some time going through that.
Got it. And then, for someone that maybe hasn't even gone to that first step, like let's say they're looking for a tax accountant, like what are some good, general questions to get a sense if they might be a good fit to work on, your crypto and NFT taxes?
I would say test in a nice way, test their knowledge of crypto, and if they are fans of it, essentially, like you really need to understand this space to be able to translate the traditional tax world into this, and there's a lot of nuance and things that are unclear. And so I would describe some of the interactions you've done, maybe some of the more complicated ones. If you've got one of those crazy convex YVE CRV3 things, like throw that ticker symbol out and see if they fall out of the chair. If not, then they might be a good fit. Or just ask if they have a dedicated crypto team, because at Armanino, we've got of course our big tax team that does all the traditional stuff, but then we come in to support them, and we have a great relationship with our tax team, and we do a lot of we basically act as translators. A client will come on and bring something up, and we're like the middle, how we explain this and try to figure it out with the current tax code.
Got it. Yeah, I think there's I just hope that a lot of people have already picked out their tax account. If not, then I feel like now is probably going to be the best time, better time than ever. Would you also say that it seems like some of the bigger tax accountant companies are going to be a little bit maybe more in tune with NFTs and cryptos, whereas would you say that some of the smaller companies might not be a good fit? Or I guess obviously you have to have conversations with them, but I would think that some of the bigger companies are a little bit more in tune with all right, this is something that's coming on our radar.
Yeah, I would agree with that. I would say, if it's a really big one, the fees are going to be bigger as well, and so it kind of adjusts down to the size of the firm. From what I've heard in my personal life and from friends in the industry also, if it's a very local firm, and that's sometimes a tougher thing. They don't know. There's older CPAs, and they just don't know a lot about crypto, and so there probably is a sweet spot in somewhere. And I don't know exactly what size it would be, but that would really be that to be able to answer the crypto questions and be able to handle all this kind of crazy stuff really well.
Gotcha.
And there's also existing kind of resources out there that can give you kind of some general understanding. I think there's the NFT tax guide that Jacob Martin and Alex Rudnick put out a couple months ago that I think is a great resource for people to get just a general understanding of cost basis, how some of these different contract interactions could really relate to tax liability. So that's definitely something I would also recommend, and that may also be a useful resource to hand over to your existing CPA if they're needing that insight as well.
Got it. And then earlier this week, I was kind of talking with some people in the community, and I have a specific tax scenario here, and it looks like, I believe the question was from someone who used CoinTracker, and they're basically just asking, is there any issues with using the buy wallet cost basis tracking method if it saves them money?
So when you're thinking about your tax filing, you want to first and foremost be consistent, right? So if this is your first year, it really doesn't matter whether you use a universal tracking or by wallet, but it's important not to just pick whatever is advantageous to you based on the year. Stick with that and follow through. But overall, that's not a huge issue. We don't really see that too commonly. But a scenario where that might be beneficial is if you bought ETH from the ICO and it's just been sitting in some cold storage wallet, and then you have another wallet that you've been using more frequently for yield farming or NFT trading, and you want to keep those cost bases separate. So that's a scenario where it'd be better to use a by wallet tracking system instead of saying you're selling ETH now, and then it triggers a tax liability from when you bought it when it was less than $1, right?
Can you actually, for people who might not know, can you tell us the difference between, a buy wallet and a universal one?
Sure. So buy wallet would be more similar to traditional finance, right? So you have a Robinhood account, and then you have an E-Trade account, and then you have a Charles Schwab account. Like those are all tracking separate cost basis, whereas a universal is saying, regardless of where you bought it from, we're going to follow these orders. So if I bought ETH at $100 from one wallet and then ETH at $400 from another wallet, if I'm using the universal tracking, it'll basically reconcile like the cost basis. So there's different options. So there's high in, first out, first in, first out, last in, first out. Again, with those, you want to be consistent. So, but basically, that's just how it tracks which crypto to sell first.
Got it. Okay. No, that makes total sense. And I feel like gas fees are always a big thing, especially people who are, buying NFTs, selling NFTs. Sometimes people have had success maybe buying something, and then, obviously that requires a gas fee if you're buying NFT. And then also people that have failed gas, can those all be used to offset capital gains? Or is that, I feel like I've kind of heard, from certain places online where it's like, yeah, but then it depends on this, and then no, because this is like, is there I'm guessing there's probably not like something set in stone, but can you kind of give us like what your thoughts are on that?
Yeah, there's hardly anything set in stone in crypto right now. Yeah, you're exactly right. You're going to hear different answers. Generally, like typically, if it's if it's part of the transaction, like the buy or sell, then that would be like an associated like cost, similar to like how you would have a brokerage fee on a stock, and then it would be part of that basis. So if you buy it and you would include that, you could include the gas fees as part of that underlying like cost basis. If it's like just a random send, then it's more of a gray area, and generally I would say no. If it's just other or depositing into like a DeFi platform or something. Now you don't have to pay taxes on that. Like it's not like you're spending like a cup of coffee, since it's like the utility within the platform.
Mm-hmm.
So as long as you can make a case that it's in within the buy sell transaction, failed or successful, then we typically would say that can be adjustable, like part of the game.
Okay, great. And then I know there was a community member, they said they were interested to hear about airdrops. And, whether that airdrop is a token like ENS or an NFT, which would be more of like a reward for being a collector. Like, how would that kind of be factored in as far as taxes?
Yeah, so that's a very interesting area, right? The phrasing that a lot of people hone in on is dominion and control, and that's really a gray area depending on the type of airdrop. So if you think about something like OpenDAO, where you just click a button and you claim your SOS tokens, there could be a case made that since you were able to claim right away, it's immediately, but you could also make a case that it's you had to actually spend money to buy that, or buy the tokens from the airdrop. So it's really situational. You could also think about different scenarios, like if you received the token for free that later had a liquid market and a market value that you could sell for, something like the mutant ape serums, where you received it, but there wasn't a liquid market yet, so you can't assign a price yet. Or you might think about a scenario where there's already a liquid market and you've later received the tokens as an airdrop. So something like the Meta Hero Planet giveaway with Punk's comic. So unfortunately, it's another scenario where it depends. But as long as you're doing these things in good faith, I think that's the most important step one. And then we're eagerly awaiting for regulatory clarity as the year goes on.
Gotcha. Yeah, it sounds like a lot of it is still. Yeah, I mean, there's just so much gray area. It's I'm sure it's just going to vary from, company to company, person to person. So yeah, as always, like I said earlier in the show, just make sure you check in with your local tax accountant, since everyone's kind of a little bit of a different take on everything. I'm curious to know. So if you do donations for charities and organizations in crypto, does that help give you a tax break at all? And if so, is there like a specific way you should be doing it or not doing it?
Yes, it does. You should check with this specific charity and make sure they qualify. A lot of them work with processors like the Giving Block, and there's a
Mhm.
few other ones, and so they'll like give you the forms and stuff that you need, and as part of the donation, and so it's pretty easy. But just marking a transaction as a donation doesn't give you a write off, and some if it's over 5K, since crypto is like designated as property by the IRS, you may need like a qualified appraisal, like just from your tax value or valuation people like that. You would say, okay, here's the valuation of this asset and or NFT or even if it's Bitcoin and why, like what markets are we taking the price from? If it's a liquid bigger crypto, those are easier to do. If you're donating an NFT, then definitely like that's something you would want to talk to your accountant about and get a good appraisal on that.
And how does that happen with like an appraisal? Is that something that the accountant helps out with, or do you have to get like
Mhm.
a professional? Okay,
Yeah, it's usually different than it's a separate department within accounting firms. Like they're valuation experts. They know how to draft the documents. It's called like Form A283, and and we do some of that as well. But yeah, that only hits if you go over 5K.
okay, great. And something that was talked about a lot, especially in December, November, around the holidays, was tax loss harvesting. And I know we're past that point where people can apply to it this year, but are there any do's and don'ts that you'll have recommendations for with regards to tax loss harvesting for NFTs?
So as far as dues for it, make sure you accurately, reflect your cost basis. Don't don't inflate any numbers. Don't do anything,
Shady.
incorrectly. Yeah, do things in good faith. Things we don't recommend. Uh, I've heard people attempt to talk about sending it to the burn address and claiming that as irretrievable, selling for zero, but there isn't clarity saying that that's for sure going to be a tax loss mechanism. So we don't recommend doing that as well. Don't sell to your spouse and then buy it back for 0.001 ETH. Right.
I
That's
saw that a
probably
lot, unfortunately.
Mhm.
Like it's so
Yeah.
crazy. Yeah. And when the floor is maybe like 1 ETH and people I see were selling it for 0.001, probably to themselves in like a separate wallet. And that's like probably a huge no-no, I would think, right?
Yeah. That's
Okay.
Yeah,
not
if you
good.
get like if you start to do that on obvious collections and you get picked by the IRS and they start looking into that, you don't want that.
It's probably not a good,
Um,
yeah, not a good look at all.
yeah, don't set up wallets and sell move to other wallets and you're buying it from yourself
Yeah.
and especially if it's like obvious you're doing it frequently and you're flagging like it's like way lower than floor. That's pretty suspicious.
Gotcha. Okay, cool. And then, so a lot of people were saying that tax loss harvesting this past year would be the only year that it would happen. Do you think that that'll still be an option for people in 2022?
So as far as tax loss harvesting as like a process, that's we believe it'll still be there in some form, whether it's regular crypto or NFTs. But something that might change is how they treat wash trading, right? So right now there's kind of a gray area where wash trading doesn't happen, where you don't need to wait 30 days to buy back an asset. But in the next year or so, there might be changes to that where if you sell an NFT and then buy that same exact NFT again with it, before 30 days, then that might act as a wash trade, and then you're not able to realize those losses. So those are just things to be aware of as the year goes on.
Got it. Yeah. And like you said, I mean, I'm sure things will just evolve over time. And, what happens in January doesn't necessarily mean that in November, December, things aren't going to change. Like they will change to some degree, but who knows what.
Mhm.
I'm curious, like, what are, it seems like there's a lot of misconceptions with regards to taxes, NFTs, and crypto. Obviously, there's like some gray area. What are some of the biggest misconceptions that you've seen with dealing with these, with NFT and crypto taxes?
So thinking about NFTs and crypto for the outsiders looking in, right? I think it's a common stereotype that people in crypto are actively looking to evade taxes, but based on the business we've seen at Armanino and projects that are actively talking about preparing for tax season, that's obviously not the case. So I think that that's a good sign from the general crypto community. But then as far as actually doing these tax filings, I think people tend to think that as soon as you hook up your wallet addresses, your exchange APIs to your tax software, that everything's just going to magically fall into place, But in reality, what probably happens is you may have forgotten a wallet address, and then that dramatically changes your cost basis, or you provide liquidity, and the tax software is not reading the value of your LP tokens. So really going in and being sure that you go in and change these different parameters as necessary to accurately report.
Got it. And then I just want to give a scenario, throw it out there. Let's say I'm someone that today I'm interested in buying NFTs and purchasing crypto, selling crypto. What are if that's the the start of the scenario, what are some of the what is the best thing that I can do now to save myself from a huge headache down the road when tax season comes around next year? Should I be tracking something specifically by hand right now? Should I be I know Etherscan is obviously huge that a lot of people have used to kind of check all the different transactions. What are some of the common places people should just kind of keep an eye on throughout the year?
Yeah, I would say, me personally, I journal every move I make in crypto just because I think it's good to put thought behind why you're doing something.
Mhm.
And so with that, I kind of attach, I know I'm paying attention to I'm thinking about taxes, and then I have a manual record of everything, every position I'm moving in and out of. That's not feasible for everybody, but I think that's probably the best thing because it keeps you aware of where, even if you don't have the exact number, it keeps you aware of where the basis is. Because I think a lot of people in crypto totally forget about when they're moving in inner crypto, between two cryptos, that that's a taxable event, and that if it goes to zero, they can claim some of that loss, but you're still you've still triggered that, and you're going to owe that to the government.
Mhm.
And I think that's an important thing to keep an eye on. Another option could be to sign up for one of the tax softwares and get everything integrated and together. And that way you can kind of see it in real time and it update and apply the gain or loss as you basically do everything. I wouldn't, a bad thing to do is commingling everything and just not tracking anything. And then you come to your professional in April 10th
Yeah.
and you're like, hey, I don't even remember all my wallets. And then they start doing it because if there's a gap in the data, that really throws everything off because it'll either say your basis is zero or it thinks you're selling it even if you still have it. And so I think those are important. And you asked about specific wallets, and I think that can be a good thing too, separating your addresses into designated. If you've got some stuff that you have really low cost entry on and you just want to hold it forever, don't mingle that with stuff you're moving in and out of, or NFT swapping or anything like that.
I think that's definitely great advice. And then I know you were talking about, you kind of manually journal some of the things. What essentially are you writing down? Are you writing down what you bought, how much it costs in, let's just say, ETH, and then how much ETH was at the time, and then kind of keeping track that way?
Yep. Yeah. Whatever asset I'm exiting and whatever I'm moving into. So selling ETH for an NFT, or selling ETH for a stable coin, or stable coins back into ETH. I put some thought into it on where the market is and some stuff like that. And so that gives me my underlying cost. And then I open or closed positions. And then when I close it, I know how much gain or loss I had.
Got it. And I think you make a good point about when you journal, then you're kind of realizing what you're purchasing, because I think all of us have at some point been like a degen and been like, oh, I'm just going to buy like a bunch of these, and you don't really think about it. But when you write it down, I do think that kind of keeps you somewhat accountable, instead of it being like, I bought it and then it's like somewhere in like the digital space. But if you have a journal, you're like, oh wow, I really bought like 10 of these. Like that was like the worst decision ever. Or maybe it was a great decision, you know? And I think that's
Yeah, that accountability, when you go back and read what you wrote at the time, and then you're like, why did I do that?
Yeah.
That's how you improve and do a lot better. It's a great thing to do.
Yeah, and I think
And you can still be a degen. I mean, it only takes 10 minutes. So you just can't immediately ape. It's like a 10-minute process to think about it, which is a good thing, I think.
and maybe it's something cool to look back on and be like, wow, like I bought all these like bananas or like digital NFT bananas, and now like I'm buying like actual art that I can appreciate like over time. So I think it's something to kind of like look back on and be like, oh wow, this is like my journey of NFTs and crypto. I think it's a cool thing to do if you have time, which, you know, I hope we all do. You know, I know you kind of mentioned a little bit about DAOs. Like, what are some of the common issues surrounding crypto NFTs and, you know, people that are participating in DAOs?
An NFT project that launches and does a sale before they have the legal setup, they should be careful about that. There's a lot of consequences in there. This stuff is, when we talk about gray area, we're like in a new color definition for this, because this is like the furthest out on the frontier. If you're selling for NFTs as creators, and just make sure you're reconciling the income versus like capital gains, like, which is also a process with your accountant. I think if you're doing anything at that level, you need a professional involved to help you. If it's just an individual thing, you can get by with softwares and making a case for things. But if you're at the DAO or foundation level in a legal entity, I would definitely seek advice from somebody.
Great. And then I feel like a lot of people just don't know where like general resources are with regards to, you know, how to reading and understanding with regards to building a DAO, you know, legally and compliantly. Do you have resources that your company provides or that you know of online that might be beneficial for someone that is interested in creating a DAO, or maybe they're a part of a DAO and maybe they're thinking about creating one on their own?
Yeah, so like we're in a gray area. There's not a ton of, you know, legal, you know, translating legal documents into, you know, how-to guides quite yet. I think that's something that's still really missing. CoinDesk did have an article a couple months ago that was talking about how to do business as a DAO, which I think was pretty good insight for, you know, just general information. If you are someone who's actively looking to set up, you know, a foundation or an LLC for your DAO, that I would definitely recommend, you know, reaching out to our team, or we work with Fenwick West pretty frequently, so they're great resources as well.
Great. And then, you know, I feel like, are there any even resources that the IRS provides with regards to like NFTs and crypto, or is it basically just, you know, still kind of this gray area where they haven't published anything at all, and it's kind of just like left up for interpretation?
There are a few things on their website. Like I mentioned, it's a little older. It's about there's like how to treat an airdrop generally as income if you can get like a fair market value, and so, but it's definitely nothing on NFTs and nothing on DeFi. But they're if anytime they do something, they put it on the official website, and likely if you follow us on Twitter, we'll probably talk about anything. It's a big moment when they do, because it doesn't come very often. So yeah, just keep your eye on that and follow. There's a lot of great people on Twitter that talk about this stuff.
Cool. And Andrew, Clayton, I just really appreciate you both being on. Do you have anything else you want to add before we kind of, you know, I'm curious to know also about how people can reach out to you if they have any other questions, maybe Armanino or just like each of you individually. But yeah, if do you have any other like comments or maybe tips or suggestions for people that are listening?
Yeah, so I'm on Twitter at 0xRudy, RUDI. You know, the one thing I do want to leave off on is, at risk of being the meme of the tax reminder, when you're going through, your different DeFi NFT activities, right? Just be conscious of that tax liability that you're, accruing over the course of the year, and setting aside a little bit so you don't get to November and December and you have a big tax bill and it's all in liquid JPEGs.
Yeah.
Yeah, for sure. That was exactly what I was gonna say. Don't bury your head on this, and be like, I don't want to deal with it. Especially if you've been around a while and you're dealing with a large amount of money. In 2018, it was rough for a lot of people. In 2019, because they didn't even think about it and they had this like big tax liability as the market was going down. And so you don't want to go through that. And that would be my number one advice. Like, just keep it in mind. Get the software set up. Get a professional involved. We're open to talking to anybody that ever wants to contact us. I'm at Clayton Lowery, Lowery. You can DM me. We're always accepting new people and talking, whether it's employees or clients. Our door is very wide open, and we'd be happy to work with anybody. So just keep that in mind and take care of it early.
Perfect. I appreciate it. And as a reminder, what was discussed isn't financial advice sponsored by Artblocks, but instead, general information from a US-based company. Finally, we ask all collectors and artists, anyone that's listening, to always work with your own tax advisor, as what was discussed during the After Dinner Mints discussion may not apply to everyone. With that being said, I have some news and notes on next week's After Dinner Mints show, which will be another daytime show. That will be January the 26th at 11 a.m. Pacific, 2 p.m. Eastern Time. We have Rev Dan Cat, who is a gen artist, and really looking forward to that. They've been around Artblocks for a long time. Excited to catch up, see what they've been doing. With regards to new work, and then I know they've been working on a bunch of plottable work as well. So super excited to catch up with Dan. After that, there is a curated drop this upcoming Monday, January the 24th at noon Central. That's Leo Villarreal will release their project Cosmic Reef. More information will be released later this week on Discord in the upcoming projects channel. And also, if you want to learn just more about upcoming drops or the next curated drop, I highly recommend that you check out our weekly newsletter that gets delivered once a week with information on upcoming drops and other generative art related news. You can find a link to that in the description of this YouTube video. And one last note that I have is we've started a new series of discussions on Twitter Spaces called Minters and Makers. It's a new weekly show with a variety of artists, collectors, and other notable community members with conversations surrounding generative art. And our next conversation will be tomorrow. That's Thursday, January the 20th at 1:30 p.m. Eastern Time. We have Alida Sun, Def Beef, and Casey Rias. So that'll be a fantastic show. Some really well-respected people and some people I really follow and love who are creating some amazing generative art. You can tune into that conversation via the Artblocks Twitter handle, which is artblocks_IO. And these discussions will be recorded and eventually turned into a podcast soon. And speaking of podcasts, it hasn't been announced yet, but I think in the next week, all of our After Dinner Mint shows, which are obviously these live stream shows on YouTube, those will be turned on podcast, and those will be available probably on Spotify and Apple Music probably within the next week. So make sure you check out and tune in to our Artblocks channel. We'll make an announcement about that once we have more information. With that being said, thank you, Andrew and Clayton, so much for being our special guests and joining me on After Dinner Mints. Really appreciate you providing some insight on what's going on with taxes and crypto and NFTs. I know a lot of us are dreading probably. I think a lot of us are probably dreading it. But I think it's something that's super important to talk about. So I really, really appreciate you both being on. With that being said,
thanks, Panya, for having us.
Absolutely. Thank you both. And make sure you comment, like, and subscribe to the Artblocks YouTube channel. As always, please be kind to each other. Remember to buy what you love, and we will see you all next week.
Bye, everybody.
Bye. Have a good day. Thank you.